But I'm not going to lie, I had a hard time finding stocks to cover for this video. Why is that? Because 80% of the S&P 500 has now reported earnings. That still leaves us with the 20%, but it was still hard to find those big prominent companies that are reporting this week. But I did find 5, including Disney and a couple other names that we all know. What are they? Let's dive right in. Okay, so the first one out the gate is Disney. As I mentioned, it's beat 3 out of the last 4 quarters, but that's not its issue. As you can see, the shares are near their 5-year lows here. Now, for year to date, they're down, but barely. I would call them flat for year to date. As you can see right there at the very bottom here, they hit that low and now they're retesting it here. But a lot of people are tweeting at me, hey, Tracy, these are cheap now. But is it? Is Disney cheap? Trades with a PE of 23 and a PEG of 1.95. Neither one is like dirt cheap at all. So I'm not a big, fan of saying that Disney's so cheap you got to dive in. But this is going to be another interesting earnings call. We have Iger on it again. And what is happening at Disney and what's happening at those parks, we're going to find out. Now we're going to switch over to another name I'm not sure I've talked about because, as you can see, it has a terrible earnings surprise track record. Wynn Resorts, ticker WYNN. But it did have a big beat last quarter as people are returning to the casinos and the resorts and the hotels, as we know. But these shares are up this year, up 27%, but they're not cheap. This one for sure is not cheap. It's trading at 53 times. So a lot of questions going on about, this kind of business, what's happening out there for this summer. We're going to find out on this one too. Then we're going to switch it over to Alibaba, the big e-commerce company out of China, but the Chinese economy is kind of faltering here. Is that going to show up in Alibaba's earnings report? It's put together 6 beats in a row, but the street hasn't really cared. Over the last 2 years, these shares are still down 50%. Although up a little bit this year, but not as big of a gain as some of the American Magnificent Seven type companies. So there's a lot of questions going on about the Chinese consumer and what's happening. It is on the cheaper side, I have to say. Alibaba trading with a PE of 12 and a PEG of just 0.6. So if it's holding onto those numbers, which we will see, but if it does, this is a relatively cheap stock, but the street is still not really liking the Chinese companies. Then we're going to switch over to apparel. Ralph Lauren, ticker RL. It's put together 11 beats in a row, and as you can see, that's quite a good track record, especially during a pandemic. This stock is looking like it's trying to break out here. Year to date up 24.6%. And that's a little surprising given that if there's a recession coming, Ralph Lauren is one of the retailers and on the apparel side that is going to get hit if there's a recession and the consumer pulls back. So that was some of the sell-off last year. Then we had some sell-off to start this year, but still no recession, so the shares have rallied. But this one, a little bit's going to be interesting to watch. It is also on the cheaper side as well with a PE of 14 and a PEG of just 1.1. Then we're going to finish it up with Yeti, ticker YETI, a big pandemic winner. You can see it had that great track record until it finally missed there in 2022. Then it's missed 2 out of the last 4 quarters as the shares have kind of stabilized. Year to date, it's up only 1%, so nobody's really sure what to do with Yeti here as demand for their products has pulled back as the economy is reopened. People aren't doing the outdoor thing quite as much, so they already have their Yeti coolers. And so this inventory has been an issue and the shares have come way down. But is this one cheap? PE of about 19, so it is cheaper than what it's been in the past, and a PEG of 2, however. But over the last 2 years, still down about 58%. So long-term investors haven't gotten much relief here. but we'll see if we get a breakup or a breakdown on this earnings report. So as you can see, there's quite a few interesting charts, but none of those big powerhouse ones, I guess, other than Disney and Alibaba. Those are definitely two of the ones everybody's going to be watching this week, but we're still going to get hundreds of earnings reports this week, plus next week is another big week on earnings, and we're going to get a few big bellwethers next week as well. So you want to be sure to tune in, because I am going to do a few more of these videos as we wrap up earnings season here. Yes, we're wrapping up, coming up soon, but that means more retailers, as you know. So we're going to get some of those names. They're always interesting to watch, especially now, given these market conditions. So be sure to subscribe. Get us on YouTube. Get us at Zacks.com/YouTube. You can get all of our videos there. You can also get all of these on Twitter. Follow me on Twitter. I'll be tweeting out these charts, plus others, plus the videos, so you get everything. If you follow me on Twitter, just at my name, at Tracy Brynick. But be sure to get us somewhere, and I'll see you again next week with some more charts.